right, mic check, mic check. Just getting situated here. Just in time for Tetron Live. 5, 4, 3, 2, 1, and we're live. Thank you so much for being here. Appreciate you popping in. Chatting about GameStop today, of course, the one, the only, the stunk, right? As they say. But got a little out of the frame, but you see the Tetron. I think that's all good. We'll continue to work on that with the stream setup. Also not the most ideal, but it's all good. It's totally all good. But I hope everyone's doing well out there. Just get situated. Crazy situation. My neighbor has like these bee traps because they had like a bee problem. And this bird like got stuck in it. It was like squawking in it like crazy. So I got completely distracted with that. I was like, holy shit, I gotta stream. I gotta get like set up here. But we told the neighbor. He took it down, and I think the bird's gonna be okay. I'm not too sure. I hope so. If not, pretty sad situation, but that's what I was just dealing with. Of course, though, tonight we'll be talking about GameStop. I do want to touch on the meeting stuff a little bit. I haven't really looked at this too much until now, just as I was getting ready here. And of course, it's quarter four earnings. We just want to look at things as a whole. It's good to have that pulled up. Just a couple other small things we'll go through today, but of course, the big story is the price action these last few days. Like, look at the 5-day chart. It's just crazy. Out of nowhere, Thursday afternoon, we kind of get this jump. Coincidentally, around the time of Paramount Plus making move like that, or maybe it's not Paramount Plus, just the Paramount stock, like PARA. If I pull that up real quick, and I'm not saying there's necessarily any correlation, but if you remember, what's that guy, Bill Huang, or with Archegos, I think that was his name. Right around the same time that stock started to run, so maybe that's something, maybe not. Because remember, Archegos was short GameStop at one point, so there's some theories out there that the bag got tossed to Credit Suisse, and now Credit Suisse would toss it over to UBS, right, in terms of short position, and that's just speculation. I mean, from my perspective, that's just speculation. I don't see any like concrete evidence on that. So it's interesting that happens around the same time, but obviously there's a lot more going on with the price action. Some options traders and some people out, that tweet about like watching the flow and things like that were saying this was able to be seen coming. I truly think, in the short term, you don't ever really know. Like, there's signs, but it's not always like, yes, guarantee. But again, you guys that know me know that's not my cup of tea. I'm a long-term kind of guy, and that's nothing, like, taking anything away from anyone. Just stick with what I know, right? And we saw this price action start Thursday, continued into Friday. Friday it started slow, just went on an absolute tear throughout the day. And then if you go to the one-day chart now, we completely dipped in the pre-market distortion, climbs all the way up, back to green, starting to run all the way down, right? Up to 1738, all the way down below $14. It's crazy. Literally from 17 and change below 14, back to green again on the day for a brief moment, right? And you had this huge volume stick here. I think this was like, what does it say how much volume it was? 40. No, that's definitely not it. Yeah, I guess it doesn't on here. Oh yeah, yeah. On the top left of the screen, right here, it says it. But let's see. 132,000 volume, and that's in a 1-minute candle, right? These are 1 minutes. Yeah, so that's pretty significant volume in that moment. So not exactly sure what that was, right? And then throughout the day, a little choppy, and pretty much just all of this to close the day even. And we've seen this before. It's definitely not the first time this has happened with GameStop, but all of this happening with no news, no earnings, you have to just scratch your head and wonder, well, why does this always happen to this stock, right? And you can make your own determination as to why you believe that is, but it just makes me laugh when people who aren't paying attention, like, oh, all the Redditors, they're all piling into GameStop again. It's time for another short squeeze. It's like, how many times do I have to teach you this lesson, old man? Like, you've seen this story repeat so many times. Do you really think it's retail investors just perfectly correlating in this exact, like, two-day period of time that just, boom, out of nowhere, there's all this volume and all this tension around it, right? And this is if you go on Yahoo Finance, we saw 8 million volume, which is about double the average volume on May 2nd, which was Thursday. Then it went way up to 36 million on Friday. Today we saw 47 million. I think with today, it's a little more expected because definitely there are traders, right, who are then going to hop in and trade because they see a lot of volatility. I think generally speaking, traders look for volatility, and that's where they seek opportunity. So that might be a little bit of it, right? I'm not saying there aren't any traders out there, but I'm just saying the idea of just suddenly this breakout is because everyone's buying it at once just because they like the stock. Like, it's so not the case. And people from watching from the outside, they just simply don't get it. And it is what it is, right? It is what it is. But it just makes me laugh. People are like, oh, yeah, like, definitely nothing strange. Like, there's definitely something, right? This happens, this same, like, history doesn't repeat itself, but it rhymes. We keep rhyming, right? We keep seeing this every so often, right? These, like, just price cycles with no news at all. And, like, if you read through, like, this little article here. GameStop, what is going on with GameStop stock after 50% rally? Like, if you quickly read this as I check it on the chat here, literally there's no reason. That's their reason, that there is no reason, right? So, big news that rally. Now, traders are sharing. This had traders wondering, meme traders are behind the movement. Bullshit. Just bullshit. These seven stocks could triple, blah, blah. This all depends on how meme stock traders are feeling. If they continue to bet on the video game retailer shares, we could see the company undergo another rally in the near future. On the flip side, if this has been a short-lived rally for GameStop, if this is the case, the company's likely to give up even more of last week's gains days to come. Blah, blah, blah. And of course, though, like when it's going down, and everyone's been blasting Walter Bloomberg today as I jumped on the train, and it's like, why is this guy always yelling? So I typed in all caps at the end of the day. I don't know if you guys caught my tweet. Pull it up here. Tweeted just like him because he's always yelling. So I figured, all right, I'm gonna yell too, right? Delta I1 or whatever it is. And bro, what's with this guy's profile picture? Like, it's the most. It's like he turned on the flash and he was in a bright room already. Like, what are you doing, brother? But let's hit the chat real quick. Soljo, Chad, thanks for being here. You guys racing to be first. I appreciate that. Hi, Tetron, Sharon, thanks for being here. Appreciate you popping in. First like to stream. All right, respect it. Respect. Lots of shares traded hands today. Where do you suppose they came from? Chad, that's a great question, right? That's absolutely a great question. Sorry, Trenton, losing faith in RC and Chang. Sold over 200 shares today. Ryan Cohen's doing nothing. Frank White, thanks for being here. It's Tetron, but close enough. All right, it is what it is, right? At the end of the day, you don't have to apologize to me. It's your own individual decisions. I'm a true believer that every individual should make their own decisions, and I personally think you might regret that one day, but I don't want to tell you what to do. I'm not in the business of doing that. I respect everyone's individual decision. You know, you got to do what's best for you at the end of the day and what you personally see as the best route for yourself. So while I don't agree with that decision, I can respect it, and everyone's got to do what's best for them as an individual. Wendy, thank you for being here. Appreciate you popping in. Hold on, let's get the all chat because I hate missing chats. Like I always say, bring on the Bulls, bring on the Bears, bring everyone in. I'm ready for it. Let's see. OMG, Wendy, where have you been? Everyone's saying hello. Love that. Crazy price action. Let's go. Exactly, Jacksons. Exactly. We got all kinds of price action, right? It's up and down and left and right in circles. And just take a moment to say, I like the stock. And I keep a long-term viewpoint because I know, just seeing this, something my grandpa told me a long time ago. He actually worked on Wall Street pretty much out of high school most of his entire life. Actually, yeah, literally his whole career was on Wall Street. It wasn't like, it's not like he's this like you wouldn't look him up and know him, right? Like he started because obviously things were way different then. Like he got a job out of high school just being one of the guys that literally ran back and forth like with the trades, like back and forth from the desk and the orders coming in, right? So like he did stuff like that and then over time and he already retired like years and years ago at this point, right? Like he kind of retired right as everything started to go digital. So he was kind of like grandfathered in, so to speak. But what he told me like when I was first starting, he's like, you have to remember anything that can go up super fast can come down just as quick, and vice versa. So just as GameStop was falling this quickly, right? It could rise up just as fast over the same period of time. So as we're seeing GameStop make this big move up, it could make this move down just as quickly, right? And we've seen it in the past. And then also in the same sense, just the same way we saw like or we go back to the 1 day chart here, this dramatic move down, look how fast it was able to come right back and get to nearly where it was at the high of the day. I mean, obviously not exactly, and this was just a very volatile day as a whole. Like the high of the day was 1741, almost 741, but you got a 1 in front there. And then on the bottom, you have 1365. That's just an enormous range, especially for something with no news, nothing. There's no, like, people will say, like, oh, yeah, like, there's options traders piling in and whatnot, but this is just not normal. Like the bottom line is this is just so not normal for your average stock in the market. But GameStop's not the average stock, right? That's just the way she goes. Let's fucking go. Ryan Sung, thanks for being here. Appreciate you popping in. Hope the birds are right, dude. Jeez, yeah, me too, Ryan. Me too. I'm not too sure. I kind of as I was getting started, it was like I saw the neighbor got the bird down from like the trap. I think it's like a sticky trap, so I don't know if honestly if the birds will be able to survive. And it was sad and Yeah, I hope the bird's all right, but I'm honestly not too sure what the outcome was. Unfortunately, everyone's chilling. What's up? Good evening, everyone. Sub has the boss. What up? Thanks for being here. 517 is gonna be a crazy day, peeps. It could be Ryan. It could be. Why is Jimmy red after hours every day? Sub has the boss. The truth is, I don't know. I couldn't tell you directly. But what I can say is, generally speaking, in after hours trading, because there's low volume, the market can fluctuate a lot more. So it can move more dramatically on not a lot of volume. And I always kind of take pre and post market trading with a grain of salt. It's really about what happens with the trading day. And generally, when I feel like when you're looking at numbers and data, and especially with what I have on the screen here, I feel like you want to focus on the trading day. And I personally choose to take like beginning of the day, like pre market and post market trading with a grain of salt. So I don't think too hard about it, but you're right. It does seem like more often than not, it happens to be red after hours. Like even if it's just a percentage or two. Maybe it's a perception thing, but yeah, no, I've noticed it too. You're not wrong for mentioning that. But really, thank you guys for being here. If you could drop a like, if you don't already, follow me on X, Twitter, whatever you want to call it these days, at Tetron Invest. I'm always posting updates on there. I try and stream every Monday and Wednesday, 7:30 Eastern. Just talk about GameStop, talk about some things as a whole. At the very end of the stream, I'm briefly going to touch on Palantir's earnings because I do like to keep up with them, and I think they're a very interesting company. But that'll be for the very end. And then I got some economic information we'll go over, but looking at the price action today, you see a period like this, right? And I say I'm zen, and I really do not stress about the price action. Like I keep a long-term perspective, but I obviously get excited when I see the stock go from like 1440 all the way up to 1750 within like one trading day. That's definitely exciting to see, but I've just seen this song and dance so many times and I know anything's possible, right? But then at the same time, in my personal opinion, one of these days, I'm going to think this and then it's going to go up significantly more than I expect. So I feel like it's better to just expect anything, know where we've been or the company has been or how it's traded in the past and just understand the same thing could happen again. But at the same time, like just because something's happened in the past in a similar type of way, it doesn't mean it's definitely going to happen again or anything to that effect. And looking at tomorrow and just a week ahead, I would expect maybe volume to fall off a little bit and can we break this 1750 mark? Maybe this is a double top. I don't know. Maybe some technical analysis people here would say that. But then again, we kind of survived this huge crash midday today, or this is the huge crash midday today. We're zoomed in, and then this other little mini crash here, and it bounces back. So time will tell, right? Time will tell. Just stick to your strategy. If you're a trader, that's on you and like how you want to go about it. Stick to your trading strategies. If you're a long-term investor, try and just keep the long-term in focus and understand, this is just a short period, like volatile time. And you always got to zoom out and just look at the big picture. This is the 1 year chart, but this is definitely the most volume we've had in a long time. This volume period right here was earnings volume, or it was like going in earnings, right? Because this was the earnings number. This was the surprise on EPS. Yeah, because for the period, although this doesn't sound accurate. Well, I guess period ending October 23. Yeah, so it's. Oh yeah, this was the last earnings. I'm sorry. So yeah, we did get significant earnings after Q3, or significant price action going into it, and then earnings came out. It dropped all the way down, climbed all the way up, climb, decline, sideways. Earnings comes out, little jump going in. Earnings comes, dump. Oh, it's not. They didn't turn a huge net profit, or oh, their revenue was so bad, right? But they turned a net profit. Mostly the negative articles were about, and just negative sentiment was about the fact that the revenue had declined. But if you look at like EPS, the bottom line, and just what they're doing as a whole, I think they're moving in the right direction. Again, you're more than welcome to disagree. I'm only just sharing my opinions always. But we kind of had this decline, and it's like, wow, were they really that bad that stock went from 15 all the way down to 10 in just such a short period of time? And then out of nowhere, we get this huge volume again, right? These over this 2 day span, just boom upwards, and it's like as if that never happened, right? So you have to wonder. You have to wonder what's truly going on behind the scenes. But I'm definitely excited for the week ahead, and I just like to ride the wave. So document my journey, share my thoughts as we go along. But definitely, what I want to get into here is the compensation, or not compensation. That was the first word I just read, but just the board of directors. Ryan Cohen, age 38. I didn't even realize. I thought he was a little bit older than that. You have Alan Adel, Larry Chang, Jim Group, and you see director since 2021, 2021, 2021. That's when all the changes were made. Yang Xu, 2021, 45. Board oversight strategy. Board is deeply engaged and involved in overseeing our long-range strategy, including evaluating key market opportunities, consumer trends, and competitive developments. The board's oversight of risk is another integral component of the board's oversight and engagement on strategic matters. Strategy-related matters are regularly discussed at board meetings and, as relevant, the board committee meetings. Matters of strategy also inform committee-level discussions of many issues, including business risk, engagement of the board on these issues, and other matters of strategic importance continues in between board meetings, including through updates to the board on significant items. Each director is expected to and does bring to bear his or her own talents, insights, and experiences in strategy discussions. So pretty much what I wanted to get to, and I thought that's the part here, was really how it's all stock-based compensation. That's really what it is. And then, where is it? Mr. Cohen chooses, let's see, where they basically put that he doesn't have like any compensation that he's getting directly for his CEO role. So as you can see here, fees earned are paid in cash, none. Stock awards, a little over 200,000 for them each. You know, having vested interest in the success of the company. And then you have the former executives that we've seen go over the past year: Matt Furlong, Diana SJ. I'm going to just say that for short because I totally butcher her name, and Neer Patel. And then you have the details on that. Also, you see Mr. Robinson. I forgot his first name off the top of my head here. Was appointed GM and Principal Executive Officer. So they've really consolidated their officer positions and just executives as a whole, which I get it. You know, some people are, oh, it's not a good sign, right? But when you're just extremely focused on cost cutting, I really do think it makes sense to do this. And I didn't pull it up in advance, but you guys have seen it in my past streams where I have like the SG&A chart, and you can see how they're really cutting SG&A. And the more I look at what they're doing and just things as a whole, I really do think they're going to cut SG&A year over year, going from 2023 to 2024. Because also in the fourth quarter results, part of it was, or it wouldn't be in here because this is just the overview, but in the 10K, you can find that they're actually winding down one of the warehouses, and that wind down is being finalized in Q1. So if it was being finalized in Q1, that already was finalized because Q1 just ended last week. So with that being said, there's going to be a severance package for some of the employees in some cases. There's also going to be costs associated with closing it down, and that's going to be one-time costs. And these executives that have been let go, which I just lost here, former executives, their salaries are also not accounted for anymore, and there's some of the highest paid members. And not to say that's like going to make SG&A go down 50% or anything like that, but just continuing to move in the right direction of just lower costs and just having a really cheap overhead costs, right? Or just operating really efficiently where you don't have a lot of just fixed costs. Like you have very limited amount of just over costs that you need to pay just to keep the lights on, right? So to speak. That's like the term they use. But with that being said, you know, they do still have to continue to focus on higher margin items and ultimately getting into a new avenue of business or making an acquisition of some kind to ultimately scale revenue along with net income. I think they've got themselves to a point now where, yes, revenue is in decline, but net income has improved greatly and is now net positive. One, they need to maintain that positive net income. And two, they need to find a way to scale top line revenue and that bottom line net income along with it. So whatever they do next, it should help them scale revenue and then also scale the bottom line as well. That's how I see it, at least. You know, it's definitely not going to be that plain and simple, but that's my latest perspective on that. 5% stockholders. These are the largest holders of the company: RC Ventures LLC, Vanguard Group, and BlackRock. And then also gives you Ryan Cohen's percentage. He owns about 12% of the shares at this point in time. And then all directors and officers altogether own 37.6. So just a little bit less than 1 million are owned by the other members of the executive team, right? And Neer Patel had a pretty significant amount of shares. So it'll be interesting to see if he does dump those off, unless he did at some point. I already missed it. And I did see that Mark Robinson, that was his name, that Mark actually sold some shares. And, you know, this is unfortunate to see, but he has to be kicking himself. Like, he sold them literally right before this run up, right? And who knows of every individual's personal situations, right? Like we don't know Mark's personal life and why he maybe needed some cash, whether it be taxes or whatever the case. And usually when it's directly for compensation of shares, you do it is shown in the filing. So I'm saying maybe just other taxes or whatever other else is going on in his life, right? But I think he probably regrets it. And I obviously that's not ideal to see, but for the most part, you see like the main people at the head of the ship, like Larry Chang and Ryan Cohen, have purchased shares in the past, as long as Alan Adel. And Alan Adel is the second largest member or owner of shares in terms of the directors and executive officers. So he has pretty significant vested interest. And if they have less than 1%, they just give it a star here. They don't give it like the specific percentage. But having said all this, the vote is coming up. So you have the 5 proposals right here. Not the cleanest picture when I zoom in, but proposal 4. I'm sure you guys have seen it already. And, let me just say this. I don't want to ever give financial advice or tell you what to do, but the Board of Directors recommends a vote against Proposal 4 to consider and vote on the stockholder proposal requesting a Board of Directors skills and diversity matrix if properly presented at the annual meeting. In my oh so humble personal opinion, I think Proposal 4 is a load of garbage and a way for bad actors to make their way into the company and to try and destroy from within. Maybe that's a strong opinion. You think, oh, that's crazy. There's no way, right? But just seeing some of the things that have happened with GameStop in the past, understanding what the Boston Consulting Group is and how they operate, that's what Proposal 4 sounds like to me. A way for a bad actor such as the Boston Consulting Group to make their way into the company. Maybe it wouldn't be exactly them, right? And I'm just throwing the idea out there, but that's how I see it, right? And it just doesn't make sense that the New York controller offers this and they have such a limited amount of shares uh, relative to the amount of assets they have under management. It's like, why would they care so much? Marantz has a great video on that. You guys should go check it out. Marantz Rants, if you don't know him, I'm sure you do, but he called them too, and I still have to finish that video. Damn it, I meant to do that. I started watching the beginning, and I didn't fully finish it when he actually calls them and goes through it. But yeah, having said all this, with the votes, the voting, Ryan Cohen's going to have 12% of the voting control. So if he's on the board and he's saying vote against Proposal 4, you already know 12% is going to vote against it. But I would bet you Vanguard and BlackRock, they have pretty much significant share in everything, right? That's just the way she goes. But Vanguard and BlackRock, I would bet they're voting yes on Proposal 4. So I feel like, generally speaking, institutions and financial organizations as a whole are going to vote yes for Proposal 4 for whatever reason you want to speculate on. And individual investors and executives, insiders, are going to vote against Proposal 4. Again, that's just generally speaking, but this is where it's important to like have your say, like share your vote. You might think, oh, I only have like 5 shares, or I only have 10 shares, 20 shares, whatever it is, right? Every vote matters. Like it really does. Like I know these are conglomerates that are Vanguard and BlackRock, but if everybody with a small amount of shares thinks that way, and the vote winds up being really close, it'll be really unfortunate to see it go one way or the other just because a few people thought like, ah, yeah, like, or I would say if you have to be more than a few people like, oh yeah, my vote doesn't matter, right? So your vote does matter. So definitely be sure to vote. I've seen the brokers are starting to get it now. I voted through ComputerShare. I voted for my Fidelity IRA shares that I have. I've done all my voting already, so make sure you do your voting. If you have anyone in your life that's a passive GameStop investor, they're just in it for the long haul. They don't even really look at it. Just like, hey, make sure you lock in and vote whenever you have a chance. You have till what is it, June 13th, when the meeting is. So definitely be sure to do that. Shares of common stock that an individual group has the right to acquire within 60 days pursuant to exercise of options. That's the one. Oh, that's not even on here. Because yeah, these are like the little footnotes. And it includes like it kind of basically identifies like the unvested stock units, and then Chang Capital LLC is just Larry Chang's individual LLC. Like pretty much, if it is a single member LLC, it's just what's known as a pass-through entity. So it basically gives you like the LLC protections and what an LLC is, a limited liability company, but you're the sole owner of it. So you could also file it with your own taxes. Like you don't need to do a whole other separate taxes for that LLC, right? And let's look at Neer Patel because he did go. So let's look at footnote 13. As of April 4th, 2024, the date of cessation of employment, Mr. Patel beneficially owned 856,348 unvested stock units. Subsequently, the vesting of 94,648 of the restricted stock units was accelerated and the shares became fully vested. The remaining 761,700 unvested restricted stock units were forfeited because the applicable vesting criteria was not satisfied. We do not have information as to Mr. Patel's current share ownership. See, that's a key sentence there. But what it does say is he is missing out on 761,700 shares, excuse me, that will no longer vest because he's no longer with the company. And it's the same with Mrs. SJ and Mr. Furlong, right? Where part of their contract was the longer you stay with the company, over time, your shares vest. So if you don't stay with the company, those shares don't get vested. Like, yes, you're entitled to those shares so long as you stay with the company. It's kind of similar to when you have a 401k and usually the company matches, right, over time, but you only get to keep the match if you stay there for X amount of time. Like the company I'm with now, it's something to the effect of they match 50%, right? But it vests like 25% per year you're there. So after 2 years, 25% of that 50% they match vests, and it's entirely yours no matter when you leave. After 3 years, 50%, 4 years, 75, 5 years, 100%. So if I were to stay with my company 5 years, I would get to keep all the money they're matching. But if I leave after 3 years, I would only get to keep 50% of the 50% they're matching, right? So that's just like a rough example to give you some perspective. And then let's see here, BlackRock's note, amendment number 18 to schedule 13G filed with the SEC on January 26, 2024, has sole power to vote or direct a vote with respect to 21.8 million shares and sole power to dispose or direct the deposition with respect to 22.5. So pretty similar numbers there. But another thing I've seen someone throw out there, I forgot who said it, apologize if you're here and I forgot, that maybe this is a situation where short sellers are recalling their shares and or not short sellers, but Vanguard and BlackRock are lending out these shares, right? Because when you're selling short, like you're lending out the shares, if you want to like retain the voting rights, maybe they have to call them back, and that's part of what's happening here. And if they're calling them back, they have to buy them back, and it's causing some of this price action, maybe, right? And I would like to look at around this time last year, let's see, between May and June, saw something kind of similar-ish, right? Where we saw this little price action. Let's see, May the year before. I forget the years and months, they all blend together over time, guys. But yeah, it seems like always in May we have a pretty big move, right? Ever since January 2021 or even before that. Let's see. Yeah, that May to June period since 2021, there's always been a big move. Like if we zoom out here, let's look even before that, right? May to June. May to June. Yeah, not exactly at this period, although this is a very different time period pre 2021. But let's just get back to the full chart. So, and this is not technical analysis. Let me be perfectly clear. Like as you guys can see, like I just look at things as a whole. But you see the significant move from May to June here, and again, and then we go to 2022, May to June. We have this huge candle. Move ahead, May to June here as well, or no, yeah, right here, this upwards movement, and then May to June 2024, bigger candle. So some situations there's been a massive candle or massive price strike, but then also prior year, right, what we saw was just like kind of a consistent run up. And definitely though, like when you zoom out though, this is a pretty significant move, right? And I think, was this the time last year when they were like, if GME goes over $30, it could go parabolic, or was that even farther back? I think that was here, right? This was October. Wow, that was that long ago at this point. October 2022, where it was like S3 Partners goes on CNBC or wherever, says if GME goes over $30, it could go quote parabolic. Sure enough, just in one day, right? It blasts over $30 at the market open, runs all the way up to 35, crashes all the way down to close the day at 28. And you have to wonder, right? Is that orchestrated in some shape or form? I don't know. I'll let you be the judge of that. But as you can see, volume, every once in a while we get these huge volume sticks. And again, I don't think it's individual investors just all like, oh, what a great time to buy GameStop stock. Just coincidentally, we're all buying shares and options. Like, and it's just like that's what the media thinks, right? And how they write about it. That all depends on how meme stock traders are feeling. If they continue to bet on the video games retailer shares, we could see the company undergo another rally in the near future. On the flip side, this could really have been a short-lived rally. Investors are looking for even more of the latest stock market stories. They're going to want to stick around. Basically, this article says nothing. Like, look at the bullet points. GameStop stock is falling Monday, following a major rally last week. That saw the company's shares climb over 50% in a potential meme rally. However, the stock is falling 15%, more than 50% as of this writing. What does this mean? Like, it's literally just like AI generated. It's like AI tried to, and funny enough, it's 5 AI stocks to buy before they skyrocket. It's literally just a pointless article, but isn't it comical that there's no articles, even the accounts like Walter Bloomberg or Walter Clownberg, whatever you want to call him, no tweets about it going up. And I guess like part of me is like, all right, like some people just don't care, and then they just love to hate on GameStop, right? And that's part of it. But at the same time, like the media, they usually for other stocks, when a stock runs out of nowhere, they're like, oh, um, like if Lucid stock, right? Like Lucid cars, like I just saw them today, right? I don't know. That's what made me think of that. If Lucid had a massive rally on no news, right? Although I think they just had earnings, that was the situation. Yeah, crazy. I remember when everyone was like, "Oh, Lucid's the next big thing. Look at how their stock is done." Crazy, absolute craziness. They were hyped up so much. They still have a $7 billion market cap. Damn. I mean, I haven't looked into them at all in recent memory. But my point being, if Lucid just ran the way GameStop did over these past few trading days, there'd be all these articles. Oh, Lucid stock is up this percentage because of heavy options volume, because of heavy trading volume, because it appears to be a short. Like they would be speculating on it, and they would write articles like this on the other end of it, like, oh yeah, it's going up for unexplained. But they would write it in this same way, but in reverse, like in a positive light. But with GameStop, they never do it on the positive side, only on the negative side. And I think part of it is suspicious, but I do also think part of it is like people love to hate on GameStop. Like there's genuinely people out there who are passionately hate GameStop and passionately hate on me for talking about GameStop and other people that talk about GameStop. And what's ironic is they don't realize they're actually just making more people hear about GameStop, because when you engage with GameStop, you type even the word GameStop on Twitter, that's just making it higher and higher in the search rankings. And when you reply on my stuff like, "Oh, GameStop's such a terrible company," then you're just helping my engagement, right? Because you're just adding to the comments and just overall views of what I'm putting out. And same with GameStop, right? So the more people talk, like it kind of reminds me of the Wolf of Wall Street. That scene where like, look at this, they're calling me the Wolf of Wall Street, and she's like, oh honey, all publicity is good publicity. It's kind of true, right? All publicity is good publicity. I mean, you could, that's obviously situational, right? But I'm just saying the haters don't realize that even when they're talking about GameStop, like they're promoting GameStop whether they like it or not, right? Even if they're shitting on it, they're still talking about it and they're still getting the conversation going. And there's no light without dark, right? There's always good and evil. And I mean, that's a little more of a dramatic way to say it, right? But there is no light without dark. And what makes something good is because there's an alternate. I mean, I'm completely going on a tangent here, but the simple way to put it is there's no light without dark, right? Or you wouldn't notice the sun shine, or you wouldn't be grateful for the sun every day if it didn't get dark every night, right? So I kind of look at it in that sense, right? Like generally, very roughly speaking. One of these little blue dots here. I just started using this trading view. What is this blue dot? Is marked like a turning point or something? You guys see these little blue dots here? I don't know what it is, but let's hit the chat real quick. Oh man, everyone's popping in. Love to see it. Um, Good to know that shorting GME down to $10 caused mass price action upside more than once. That's true, Ryan. Very good point. Feels like a squeeze to me. Stash Diamond? It very well could be. Thank you so much for being here. But at the same time, I've been here a while. I just ride the waves. I know anything's possible. It could be this, it could be that. I just let it rock, right? Uh, Notice the pattern at Ryan's song, exactly. New shorts will always step in and provide liquidity for old shorts. That's why I call it the infinity squeeze. I like that stash. I like that. Thank you for popping in. Appreciate that comment. Hey, gang, Fresh Maker, what's good? The reason my headset works to this day, I'll always remember that, man. What's going on, Fresh? Found channel through Marantz. I'm enjoying the content. Thank you. Massey, I appreciate that very much. Marantz has been so good to me. I know not everyone's the biggest Marantz fan for whatever reason or another, but he's been so good to me. He's shouted me out. I've never asked for him to shout me out or anything. Like, I'm just so appreciative of him. He's been so good to me. So definitely be sure to check him out if you guys happen to not have heard of him. But thanks for being here. I really appreciate that. Good times, Ryan. Good times. Exactly. DB, thanks for being here. Because I can. What's up? What's up? Their base salaries of Mark and Dan are very low considering the roles. It's understandable that they are selling shares to supplement their income. Dear Ashimi, very valid point. I appreciate that. And something I want to do more, which I'm really glad you bring up that comment, and this is going to do another comparison I want to do. Like, I want to compare GameStop's SG&A percentage-wise to Best Buy, Walmart, and maybe some other companies, right? And not to say that they should be perfectly in line, but just to get perspective, because I think when you're doing any kind of research, like you want to get perspective of things as a whole. So another one I should do is executive compensation. So thank you for that comment. I appreciate that because executive compensation is definitely, you're right, it's relative to other companies. And people say like, oh, like it's still so much, like it's such a high amount, but you got to look at it relative to the position that it is. So I really do appreciate that comment. Let's see. Ryan Cohen will identify as a hot woman if proposal 4 goes through. Dear SGV, I love that comment, man. I love that comment. Exactly. But see, that's the thing too. It's I like I do think like diversity in the workplace is good because you want like different perspectives, right? But the way it's spun now is it's become this whole thing. It's like, oh, we need to have these quotas and like check these boxes of like this many people of this skin tone or this many people of this gender versus that gender, right? And it should just be generally, right? You should want people with different backgrounds of, not like just backgrounds of careers and like I just hate how it's all become now. It's become this like extreme thing. And like, I'm not the best person to talk about this, and I don't want to say anything in the wrong way, right? But what I'm saying is, you should want different ideas and perspectives. That's a great thing. But the number one focus should be, is this person qualified for the job? Are they a high quality candidate? That should be the main focus. It shouldn't be like, oh, we need this many of this type of person, this many of that type of person. It should be, is this person a high quality candidate? And then if also like they're uh, like from a different background, right, or bring something else to the table, great. That's just extra, right? But that's why I also think like this, skills and diversity matrix, like it's just like a BS way of getting someone else in there, right? And I hope I put that correctly because I think it is important to get different perspectives, but it's just used, it's like weaponized. I guess that's the best way to put it, right? But that's why I think that is a funny joke. Like Ryan Cohen can identify as a hot woman if Frozen 4 goes through. I see it as a war of attrition. The goal was to always survive. I'm sure they have a timeline and focus. Their forecast demise has been loudly advertised for a decade. Very good point, Stash Diamond. Very good point. If you asked anyone just 5 years ago, would GameStop still be around? A lot of people said no. Even myself, I probably would have said no, right? But given where we are today and everything that's taken place since 2021, I also bet they like anyone betting against the company thought like, oh yeah, like after January 2021, even June 2021, maybe even the end of 2021. All right, like there's no way people are actually investing in GameStop, right? There's no way they're actually going to cut costs and operate efficiently going forward. And all that is happening, right? There's individuals who like the stock, who are invested in the long term, and I know that's for myself. I can't speak for everyone. I'm not saying that everyone necessarily is, but I'm just saying there definitely is a large investor base, and on top of it, the company is profitable. They turned a net profit. That is the bottom line, like literally the bottom line on the income statement, right? So if you were betting against it, and remember, people were heavily shorting it prior to January 2021 going into it, and you read the SEC report, they say the price action was not short covering. It was retail interest buying and a gamma ramp. That's essentially like a lot of options being purchased, and people were selling naked calls, had to buy the shares to basically cover it, right? So with all that, it's like, well, then when did they close? If they closed, it would have caused another massive run up after this, right? And I feel like the bears and the haters will say like, oh yeah, like they closed within this period right here, right? Where I'm kind of roughly going through like the remainder of 2021, early 2022. But then how does the price keep going down if there's a lot of people investing in it, right? And I'm not saying everybody's held it all this time, and I do understand there's people that have come and gone. That's just the way she goes, right? But it just, to me, it just doesn't add up. It doesn't add up. And I like the stock, and I believe in Ryan Cohen. I believe in where they're trying to take the company. So to me, if I just focus on fundamentals, the company just focuses on continuing to improve, then whatever is underneath will bubble to the surface at some point or another. And when, I could not tell you. I'm not going to try and tell you. But I think it's going to bubble to the surface, and that's why I'm in it for the long haul. That's my personal opinion, to be honest with you. But see, State Street wants to know. The New York controller worked for State Street, and he did an interview saying he supports ECG agenda. This guy's a clown. They make climate change excuses to put people on the board. Because I can appreciate that insight. Exactly. That's what annoys me. Where it's like they make these excuses about these things, like, oh yeah, like we need this, and they spin it where it's like if you say anything against that, oh you don't like diversity, that you're a terrible person, oh my goodness, right? Or something like that, when it's like, no, I just want the best candidate for the job to run the company, and I like the candidates that are in place as part of the board of directors right now, right? So that's where it annoys me. And yes, I appreciate that. I gotta watch the rest of that video from Morantz. And he does a great series, Connect the Dots, and you can learn a lot from that. So, and let's see the details of of 4. Um, let's see, Subtetron, Donko, thanks for being here. Appreciate you popping in. Big options trading lately. Scott, you're absolutely right. There definitely has been a lot of options trading. This is the full executive. You have salary, bonus, stock awards. Again, as you can see, Ryan Cohen, all his own money, all his own money. It's truly a one of a kind situation in that sense. Like, I don't know anyone else like Ryan Cohen that's done that with any company. Like, show me another company that has chairman of the board and or CEO with absolutely no compensation, right? So it is what it is. ESG, DEI is the worst. Qualification is non-existent. They put the working people in no end positions for professional welfare and push the unproductive up. I hate it. I live it every day. HR hires the people. You can't even interview candidates. Look at the Palestine protests. They left a huge ecological mess on site. They made it a landfill. That's how much they care about the environment. Challenger, yes, I think you definitely bring up great points. And, I don't even I really try with like the protests and stuff and the wars and all that. Like, I really try and just shut that out. So I don't even like know all the details of that. So I'm not even going to begin to try and talk on that. But it's just the hate and the negativity and just the way things are spawned these days. Like, I think no matter how you feel about things one way or another, everyone's kind of generally, I would say, in agreement. Like, so much negativity, there's so much negative connotation to things, and things are just spun in a certain type of way to just push these narratives. And in general, right, it's so hard not to know what to believe these days, whether it's news, information, anything. It's so hard to know what to believe these days, right? And even now with AI image generators and even AI videos coming out, even like you're literally not gonna be able to see a video anymore and know like like I really think like 2 or 3 years you're gonna see a video and be like, I don't even know if that's real or not. Like it's crazy, right? It's crazy some of the things happening, but oh man, what a world we live in, and it's scary. Like I always say this: AI is the coolest but the scariest shit ever. It's really cool for like gathering information, being able to comb through stuff, summarize things, get clarity on things. Although AI generators aren't always correct, so don't just ever blindly trust it. And then also the images are super cool. That's how I'm able to make these awesome thumbnails for these videos now. I never ever would have been able to do that. But at the same time, it's like the genie's out of the bottle. There's no going back at this point, and I don't think, and also the people who are in charge of AI, right, or that are facilitating the stuff, like OpenAI or whomever else. It's like, is this really the people we want to like let this fate like lie within their hands? Like, I find that extremely concerning, of all things, too, right? And it's crazy. It's so crazy because it's like also anytime something comes up, right? Like when the war started with um, everything that's going on, right? And again, I don't want to speak on it because I don't have the knowledge to speak on it. But I'm saying it's like suddenly when a war breaks out, everybody on the internet is an expert, right, on foreign affairs out of nowhere. Just the same way in January of 2021 when GameStop stock exploded. Suddenly everybody was a short squeeze slash individual stock master, right? It's like whenever something becomes like a big thing that everyone's talking about, and now suddenly everybody's a protester, and then the next thing will be suddenly everybody's this, right? It's just a lot of not even necessarily like herd mentality, but just whenever there's something that's being talked about widely, everyone has to share their opinion, and suddenly everyone thinks like they're this expert, right? And yeah, I don't know. I'm going on a complete tangent here, but let's get back to GameStop. Let me turn off my sweatshirt real quick too. It's pretty warm in here. Just a moment. Just gotta remember to drink water on the stream too. I literally always forget. Gotta drink water. Hydrating's so important. But really, thank you guys for tuning in. I really do appreciate you guys so much. Always hopping on the stream. Let's make sure the mic is good. But yeah, where did I want to see market value of shares or units that have not vested? So these are some of them for Dan Moore, Mark Robinson, and then you can see the significant amount for Neer Patel that he ultimately won't have vested. And there's a lot of nitty gritty information, so it's really best to kind of go over this on your own. And I don't want to bore you guys too much going into all the little details here. But yeah, I'm just trying to see if there's anything else major I missed. And I really do have to look through this more. I haven't looked at this as much as I should have. Let's see. Cohen, SCT. Yeah, I think I pretty much, got the bulk of it here. I thought there was one other thing I wanted to touch on. Oh, yeah, proposal 4. Let's get to the details of it. This proposal was submitted by the New York City Comptroller as a custodian and trustee of NYCRS, the beneficial owner of an aggregate 275,611 shares. Requests that its board disclose in its annual proxy statement each director nominee's self-identified gender and race/ethnicity, as well as the skills and attributes that are most relevant in light of GameStop's overall business, long-term strategy, and risks. The requested information shall be presented in matrix format and shall not include any attributes the board identifies as minimum qualifications for all director candidates. Supporting statement: investors believe that a diverse board in terms of relevant skills, gender, race, and ethnicity, and indicator of a well-functioning board. Among other benefits, diverse boards can better manage risk by avoiding groupthink. GameStop's board sets the tone from the top, and the disclosure of the board matrix would signal to employees, customers, suppliers, and investors that directors themselves value diversity and inclusion in the boardroom. It's just, again, it's just being weaponized. That's really how I see it, and I think it's a way to just get a bad actor involved. That's my opinion. And when you look at the board, it's not like I just it's just so ridiculous. I don't even know know how to talk about it, right? Let's see. Other leading companies such as BlackRock, Intel, Advanced Autopods have published a board matrix with an individualized director data in a decision useful format. The matrices use EEO1 categories for disclosing the diversity of individual directors, which allows for consistent comparable data. We urge shareholders to vote for this proposal. But again, why do you think GameStop's board of directors said no? Because then that would mean they would have another board. And I like that they have a small board. It's not a multi like right now, right? As it stands, let's look at the market cap of GameStop. If they were at a market cap of 50, 60, $100 billion, yeah, maybe they should have more board of directors members, right? And even if that was the case, I would want Ryan Cohen and the current board to choose, not have somebody forced in there, just because, oh, we need to check this box, right? But they're a $5 billion company. They have 5 board of directors. So at this point in time, right? And again, I think it'll be worth more in the future. But I want them to just focus on good people who want to be there and run things properly, right? And I'm sure you guys could tell, I don't want to say anything I'm not trying to upset anyone in any type of way, but to me, just generally looking at this, it's nonsense, right? It's nonsense, and it's a smokescreen to just get a bad actor in there. That's my opinion on it. And again, you don't have to agree with my opinion. The board unanimously recommends you vote against the stockholder proposal for the reasons provided below. There you go. Against. That's the whole board unanimously means that they all say it. Let's see. Opposition. Okay, perfect. GameStop does not set specific minimum qualifications for nominees for director and does not have a policy regarding the consideration of diversity for such nominees. We do not believe diversity, whether of gender, race/ethnicity, or any other criteria, is meaningful basis by which to identify and assess the qualifications, I love that, qualifications, of director nominees, nor do we seek director nominees purely for the sake of diversity. Exactly. See, they're putting it way better than me. That's what I'm trying to say here. Instead, we seek nominees for director who possess business acumen, high integrity, and an ownership mentality, and a deep, genuine interest in GameStop. Our board is composed of individuals who exhibit these traits, and that's a well, much more well put than I could have put it. And it's true because I don't care who is what gender or what skin tone or from where. If they love GameStop and work hard for the company, that's who I want there. And I want someone capable, right? And with those attributes as they put here. Instead, we seek nominees for director who possess business acumen, high integrity, and an ownership mentality, and a deep, genuine interest in GameStop. Those should be the focuses. And it's like, of course, anybody could be that. It doesn't matter where they're from or what they stand for, but if they have these qualities, like that's what matters to the business. That's what should matter, right? So that's the nonsense that is proposal 4. And we'll have to see, right? Because all this is up for vote, and at the end of the day, as we looked at up here, the majority shareholders are Ryan Cohen as the major one, but then BlackRock and who is it? Vanguard, who own pretty much the whole world along with State Street, have just massive influence. So yeah. All right, I'm doing too much scrolling here. I should probably move on now, but oh no. Can you hear me now? Is it working? Well, let's get the side. Okay, good, good. I was like, oh no, I hope I didn't see that comment too late. But no, I appreciate that, DB. Thank you. Because I had to unplug it for a sec. I realized as I took it off. But study Exxon ESG. Okay, because I can. I got that. I'm gonna look into that. Listen to Disney's last conference call that tells you all you need for ESG. Yeah, no, Challenger. It's a shame, right? Because it's weaponized. It's really just a weaponized thing. It's absolute craziness. It really is. But having said that, I'm gonna continue to troll Star Walter Bloomberg. Should I change my name to Star Tetron Bloomberg? That would be funny, right? That would be pretty funny. But I never understood these accounts. Like, why do you just type in all caps? Like, and then also, yeah, Ken Griffin was on today talking about a lot of stuff. Griffin, if Fed doesn't cut in September, it will in December. Griffin says a difficult cycle is going to happen again. Fed needs to bring inflation down over time. Thank you, Captain Obvious. Fed made right choice in staying higher for longer. Griffin says unsure about when rate cuts will come. Yeah, I mean, in my opinion, they shouldn't cut until inflation is tamed. But at the same time, right, because then inflation is just going to rage on more. But at the same time, like when you look at the deficit and you look at the things going on, you look at the country's always turning a deficit. The government spends like a drunken sailor. I can definitely speak for the U.S. in that sense. In this, there's no signs of it getting better, and I don't want to say not getting better, but there's no signs of the tides turning, right? Like it doesn't seem like anything's going to change in 2024. It seems like there's going to be a deficit, which means there's going to be more government debt, and now we're issuing new government debt at much higher rates than before to pay off debt that is now maturing. So it's kind of this spiral that it's like if something doesn't change, so even if rates are remaining elevated, they have to print money at this higher rate and sell it through T-bills that are paying higher rates, so they'll be more in debt. So it's like the Fed is kind of stuck in a sense because unless something changes, right? Unless something changes, unless suddenly the country turns to surplus, like we stop excessively spending, uh, cut costs, or not, yeah, not cut costs, right? It's not a business, but stop excessively spending and we don't have as much of a deficit. And if we had a surplus, then we could start paying down high interest on government debt, right? We don't have to do as many bond sales. And then also you have to think about like who are the major bond holders? It's other countries. So when they get into trouble, maybe they start to sell off the bonds. And if they're selling off the bonds, and then this is where we start getting off somewhere far beyond my expertise where I can just speak off the dome like this, right? Like I understand the concepts, but it's hard to just, always speak about them off the dome. But with all that being said, I think, high rates are here to stay. And it's crazy to me because I grew up in a time period where, I've said this in the past too, where I literally used to think like, why would anyone ever not invest in stocks when you get a good return? And or the goal obviously is to get a good return, but with a savings, you were getting like literally less than 1% or a money market. So I'm like, why would anybody ever do that? Because I grew up learning finance in a period where rates were literally always 0, 1. At the highest they were, it was like 2%. I remember learning like, wow, you could earn 2% in a high yield savings. This is crazy. It must be a scam. And it's like, no, it's just a thing called an online bank. And then I did some research and realized, like, oh, prior to 2008, you actually used to, and 2000, even more so, like prior to 2000, you used to be able to earn pretty decent interest, and the regular big banks used to offer that interest, right? So crazy, crazy. But I really love this comment. I'm sure you guys have seen Ian Carroll, right? Say Carroll, and he basically just talked about how Ryan Cohen gets paid $0, and comparison to all the other CEOs that get paid millions of dollars, and then not to even mention their stock options. But I just said I so much respect for Ryan. I truly think he's one of a kind. Although it would be nice to see other CEOs with this mentality. And shout out to Blake Biernacki. I like this comment. Ryan Cohen is not a CEO. He's an entrepreneur. You can become an entrepreneur. Excuse me. You can become a CEO by climbing a ladder. To become an entrepreneur, you have to be willing to risk it all. Entrepreneurs believe and invest in the company. Ladder climbers believe and invest in themselves. I really think that was a great comment. I really, really appreciated reading this because it's true. And he has the entrepreneur mindset from his time at Chewy. And I've said this in the past too. It's not the same as Chewy in the sense it's not like he's building it from the ground up. Like he has to pivot the company through leadership. But that entrepreneur mentality of like, I don't, like, I'm in this for the long haul. I'm going to be captain of the ship. I don't need to get paid from the company. Like the company needs to save every dollar it can right now. So I wouldn't even be totally opposed, right? If in the future, like 5 years from now, he does start taking compensation, if he is still in the CEO role. But maybe at that point, he finds another CEO that's suitable to run the company. Things are rocking and rolling, right? Although I feel like knowing how Ryan Cohen is, he probably is never going to do that because if the company succeeds, he has enough shares where he's going to benefit very, very significantly, right? And you also have to remember, majority of his shares were acquired in late 2020. So he was really buying shares. I think it was from approximately August 2020 all the way till about December 2020. Then the filing came out because he was an owner of more than 10% of shares. So he was required to publicly file. And also on top of it, GameStop was buying back its shares at that point in time. So because they were buying back shares and he was buying shares, it got to a point he was over 10% owner. And everyone was like, oh, who's this Ryan Cohen guy? And then Wall Street Bets happened, and then January 2021 happened, and a lot has happened between now and then, right? But here we are today. So with that being said, his average cost, I don't know it exactly, but it's definitely lower than even like $10 a share. So he was buying an extremely low price point. So to this day, he's still up. And point being, the more the company succeeds, the greater the value of his position is. And maybe GameStop does dividends one day, and then he's also profiting in that sense, right? And then maybe he does dividend reinvestment with the shares, right? All just speculative stuff here, right? I'm just throwing it all out there. But yeah, that's pretty much what I got for GameStop today. So one quick thing I want to talk on as I was talking about the deficit there. And I'm really starting to learn more and more about economics, and it's one of those things where like with economics and just U.S. economy as a whole, I feel like I do really understand it, and I can see what's going on and why everything's getting so messed up. But I feel like I'm not an expert, right? In the sense like I can't quite explain it like this. Like if I have information in front of me, it's much easier because I can build off of that, right? Just I want to get to the point though where I can fully explain things, like just like boom, boom, make you understand, right? Just like, but that also comes through just being a better communicator and improving myself, right? But with that being said, I always shout them out. Oh yeah, I finally got the pronunciation. Yo, where did I write it down? I always butcher the name on this. No, I literally wrote it down so I didn't butcher it again. Look, see guys, I looked it up. I looked up the pronunciation. Kobe letter. The Kobe letter. There we go. The Kobe letter. That sounds much better, right? So the Kobe letter, they put out some great information. It's how I keep up with most of my economic stuff on Twitter, at least, or X. And I just think they keep it real, and I like just the way they share it. So shout out to them. But breaking U.S. economy. This was a little older. This is May 3rd last week. U.S. economy adds 175,000 jobs in April, below expectations of 238,000. Unemployment rate rose to 3.9%, above expectations of 3.8%. Still, the U.S. economy has added jobs for 40 consecutive months. Is this more evidence that we're entering stagflation? And on top of it, you have to look at a lot of these jobs are part-time jobs, right? Or people that are struggling and getting second jobs, right? So it's like, yes, there's jobs added, but what kind of jobs are they added? And then you also have to understand there's unemployment and there's something called underemployment. What underemployment is, if you're not familiar, is essentially somebody who's qualified to do a better job and is just doing a base job, right? An example would be if somebody is, like an extreme example, has a degree to be a doctor, right? And they're working at McDonald's because they can't find a job. Again, a very extreme example. Yes, they're employed and it doesn't get factored into unemployment, but it's considered underemployed. And then that person might have tons of debt, right, from going to medical school. So then they all have a job at McDonald's, like, I need a second job. And then they go get a job at Walmart. So yes, now there's another job added, but that person is underemployed and working two jobs just to get by, right? So you have to like look at the big picture. And then also a scary thing is, as AI becomes more and more relevant, does it really start to take jobs? I see arguments go back and forth on this, but I think, maybe if not today, tomorrow, even next year, or the following year, you don't think in 10 years from now AI is going to be doing more and more jobs? And also, as it's becoming more and more expensive to pay employees, you already see like McDonald's and a lot of these food places already starting to automate the ordering with, like, go to McDonald's, they have the giant like thing. You're like, oh, I want this, right? And there's like one cashier and the rest of the people are just ordering on the screen. And then even now, I've seen a video of like a Wendy's drive-through, and it's like it's not even a person working the drive-through anymore. It's an AI, and those are maybe just some very specific examples, but you don't think more jobs are going to be taken away, and that just fuels the fire of stagflation. And stagflation is very scary, right? This was the first massive miss in jobs expectations of the year. The unemployment rate could rise to 4% next month, which is pretty significant. If labor market continues to weaken, it will definitely impact the Fed's path. Definitely very true. And if you're not familiar with stagflation, here's a quick summary right here. We'll zoom in, and this is where I love AI in the sense like it just gives you a good, solid summary straight to the point. And I remember when I was first learning economics in high school, I took a macro micro like hybrid class, just kind of getting you introduced to it in my senior year of high school. And what my teacher always said was like, stagflation is the worst. Like, there's inflation, there's deflation, but stagflation is as bad as it gets. So that's slow economic growth, isn't expanding or producing new jobs at a healthy rate. Prices for goods and services are steadily rising, reducing purchasing power, which is high inflation, and then high employment. A significant portion of the workforce is unable to find jobs. And with everything I'm talking about and describing, right, with AI and just the way things are going, it's a scary thing to think that this is possible, right? That it's something we're moving into. The situation creates a complex challenge because traditional economic solutions often worsen one problem while trying to fix another. For instance, raising rates to combat inflation can slow economic growth further and lead to higher unemployment. And that's where the Fed's in a pickle right now, right? And people say, like, the Fed's stuck. Here's a breakdown of why stagflation is such a headache. Policymakers face a dilemma. The usual tools for managing inflation can worsen unemployment and vice versa. Consumers feel the pinch. Rising prices eat away at savings and wages, meaning less people investing and just helping, like, spending in the economy, while joblessness reduces income. Businesses struggle to plan. Uncertainty about economic future makes it difficult for businesses to invest and grow. Stagflation is a relatively rare phenomenon, but a notable example occurred in the 1970s across many developed economies. And what happened? The US, the world reserve currency, what the Fed did was they raised rates to huge levels, right? Literally, at one point, the interest rate was like 18 or 19%, just an absurd number, right? Imagine they did that now. We'd be issuing bonds at, if the Fed just raised rates to 10% rate, we're issuing bonds at 10%, and then why would you go invest in the stock market when you can earn an average of 7% a year in the stock market, right? An average doesn't mean it's a guarantee because the stock market's never a given guarantee, whereas the risk-free rate would be 10%. And I'm surprised we're not seeing that more already, like with the stock market, considering you can get a guaranteed 5%. Like in my, like I use Marcus Online Savings, and the base rate is 4.5%. If you refer someone, it's 5.5%. You get an extra 1% bonus. I'm saving a lot of money right now, not because, like, I obviously think I'll get a better return investing in things in general, and I believe in GameStop for the long term, and I'm definitely still investing in it. But for me, like, I'm trying to start my life, trying to, you know, just start my girlfriend and everything, and where we want to get to and all that. So I need to build an emergency savings, and I need to have money for things I expect to spend on in the short term, right? And my short term is not as short as other people's. Like, my short term is a year or two out. Things that I'm looking at, I'm going to need to spend on in the next year or two. So when I can earn 5.5% risk free, and it's money I need to save anywhere for things I'm anticipating purchasing, and like whether it's a house or whatever it may be, right? That I'm looking at, and not doing anything like tomorrow or anything like that. But I'm just saying I'm more and more incentivized to save the money because, one, I need it in the future, and two, at least I'm going to earn a higher rate. So as the Fed raises the rates, it incentivizes more individuals to be like, oh, well, risk free, I can earn this rate versus I have to take a risk in the stock market. But yet we've seen the market rage on. But then part of that is too, like with inflation, assets pretty much inflate as well. And every time you think the market dips, right? Like, okay, maybe it's getting ready to crash, right? Nope. Like, look at this 5-year period. We have the pandemic crash, bounces all the way back, goes all the way up. We have pretty rough 2022 as a whole, complete down. 2023 is a pretty strong year, right? Closes strong at a pretty much a new high, or back at the like high of 2022. So from 2022, right? This is the end of 2022, right about here to 2023, end of 2023. You can see the move up. And then pretty much at the end of 2023, we were just getting back to the all-time highs previously. And I always just look at the S&P because it's the most best like general indicator. And then from 2024 on, right, we've just seen the market pull higher, and finally, oh, maybe we're going to see a pullback here. Maybe 2024 is not going to be good, and now we're pushing up again, right? Not to say the market can't crash later this year. We have a long year ahead. I mean, there's still several months to go, but just look at this from like the bottom of November, and this was really when it was like, all right, like maybe things aren't that good. Like since Halloween, from 410 to 510, that's like a 20% move. In like a 6-month span, the market's gone up 20%. I don't know. It's just, again, from what I said at the very start of the stream, anything that could go up that fast, it could come down just as quick. So in the next 6 months, the market could easily fall 20%, right? And we kind of saw it here where we had this huge move up, but then with this huge move down. And I mean, huge is relative to what you think it is, right? But gotta just always look at the big picture and just always looking at everything, right? That's definitely the best way to go about it. And then the very last thing I want to touch on here a little bit is going into Palantir. Very briefly, you're going to go through it and then going to wrap up the stream. So, 6 straight quarters of GAAP profitability now, fifth straight quarter of GAAP operating profitably. Adjusted EPS of 8 cents. Revenue grew 21% year over year, 4% quarter over quarter. Commercials growing a lot, 40% year over year. And then the customer count, that's really the thing that stands out to me. Because really, they've done government for a long time. That's been a majority of the revenue, but more and more of their like revenue share is becoming the commercial customers, and it's 69% growth year over year. But you'll see like the U.S. commercial revenue only grew 40% because a lot of the like new customers, what they do is they sign them to like these entry level deals, and they start implementing it, and then after like a trial period, then they sign like a big contract to really do a lot more for the company, and then they bring in a lot more money in the long term, because then also these are contracts that scale as these companies scale, and they need more Palantir's like execution, or Palantir is more a part of what they do. It scales like with the companies in essentially. So then U.S. government revenue grew as well, so that's still doing pretty decent. And then the Rule of 40 score 57%. Just free cash flow, 23% margin. Cash flow from operations, 20% margins. Still very strong cash equivalents. And then also they bought back some stock as well. Let's see, is that in here? Not a massive amount, but I did see they bought back a little bit of stock. And for full year 2024, they did raise their guidance slightly. Same with their U.S. commercial revenue, adjusted income, pretty much everything got raised over across the board, but stock did go down after hours. And honestly, I'm not too surprised though, because I feel like it was going up going into earnings. So unless they had an absolute blowout quarter, they raised guidance significantly. This quarter was very, very strong. then we weren't going to see them make a huge move, because you see this the way they were running, like going into this earnings report, right? So I feel like it was kind of expected for a dip, but I think Palantir is going to be all right, and they're going to do very well in the next 5 to 10 years as things become more and more AI based. Because they're very generally speaking, it's like connecting humans and artificial intelligence, so it allows people to see the information to make the best possible like business decisions, right? And I'm definitely not as bullish on Palantir as I am with GameStop, but I definitely do believe in Palantir for the long term. I'll definitely say that. And I mean, I think GameStop's a more unique story, and I've just followed a lot more, and I'm much more involved in GameStop. But I do believe in Palantir, but I just think GameStop's its own very, very unique thing. And I understand that not everyone gets that. And people are like, what do you mean? And I'm like, don't believe, just watch, just watch. And I love Alex Karp. He's so funny. He's always like, yeah, the short sellers, they're going to be doing cocaine. Like, you got to watch the clips of this guy. Like, even if you're not interested in Palantir, just watching any clip of him, like, you will be entertained. Like, he legit looks like a mad scientist. And yeah, I mean, that's pretty much all I got for you guys today. Anything could happen with GameStop tomorrow. That is the truth. Anything could happen next week. But what I focus on, those of you that know me, is the long term. But not to say it isn't fun to watch this price action, right? And with the way today went, we went up and then down and then back up and then kind of boom, boom, boom. So tomorrow, who knows? We could be up here. We could be in the 18s. We could be back in the 14s. We could be in 13s. You never truly know with GameStop. That is definitely one thing I know for sure, that you don't ever know. Every time you think you know, you don't. But if you keep a long-term focus, do what's best for you as an individual, I think you're going to be all right. And just always continue to learn and want to do more. And regardless, whatever happens with the price action, I think we're going to see a lot of volume the rest of this week. I definitely think we'll continue to see a lot of volume. So yeah, thank you guys so much for watching. Again, you can find updates at Tetron Invest on X/Twitter. So I'm always tweeting every Monday. I tweet out like the schedule for the stream. Again, I usually try and do Monday and Wednesday, 7:30 p.m. Eastern. Yeah, so thank you guys so much for watching, and I'll just continue to improve, just like GameStop. Tetron continues to improve brick by brick, right? And I got to go through this stuff a little bit more. And there's always more work to do, right? There's always more work to do. So got to just keep reading. Come back strong for next time. But Wednesday, 7:30 p.m. Eastern, I will be live again. So definitely be look on the lookout for that. No matter what GameStop's price action is, I'll be here. Jimmy and Bitcoin's all I need. Cheers, DB. I like that. I like that. I'm definitely a Bitcoin guy too. I like Ethereum as well, but mostly Bitcoin. But that's a whole topic for a different day. Although I'll say Ethereum has much more use cases, right? I think Bitcoin is a store of value, a unique emerging alternative asset. But with Bitcoin, I'm sorry, with Ethereum, I think there's a lot more room to scale and a lot more use case for it and like what the technology is, right? So I definitely believe in Ethereum's network, and I do own Ethereum too. So like I believe in it being worth more in the future, but I think Bitcoin will go up more than Ethereum percentage wise because of its natural like it's a disinflationary currency. Like its supply, the rate at which it's being created is fixed, and every time Bitcoin halves, half as much is being created daily. So with Ethereum, it's a little bit different, and I'm learning more and more about how their supply works, and it's supposed to move, you know, so that it's supposed to be set up in a way where the supply never just becomes an infinite amount or anything like that, right? But with Bitcoins, I just know for sure, and for me, like supply of a coin is so important. And then beyond that, like I have a very, very tiny bit of loop ring from a long time ago, just letting that ride at this point. And besides that, I don't really touch any other cryptos. Like I'm not interested in anything else. I read about them, I get curious, I just want to be in the know. But it's Bitcoin and Ethereum for me, and GameStop, and a little bit of Palantir, a little bit of cybersecurity, and yeah, mostly though GameStop. Definitely mostly GameStop for me because it's risk versus reward. I think the risk is it's worth nothing one day, which I personally don't believe will happen. Reward, I think it greatly, greatly appreciates. And I just look at it as a big picture, like risk versus reward. But yeah, again, you got to do what's best for you as an individual. Doing what's best for you as an individual is always the way to go. Don't ever let anyone like influence you. You have to do this, you have to do that. Do what you have to do that's best for you. But don't just block out all the like outside opinions. Like you have to take in the not be careful who you take advice from, right? Or whose opinion you listen to, but at the same time, like you have to be open to why people feel the opposite as you, and then you want to dismiss it, right? Whereas like the GameStop bears, I think, okay, they're too focused on the revenue. They're not focused on the bottom line. They're not focused on what the company can be in the long term, underlying things, the strength of the leadership team, things like that, and the willingness of the leadership team to do whatever it takes to maintain profitability at this point in time. And that's what I believe the case is. And again, always just sharing my opinions. You guys are always welcome to disagree. This is my investment journey that I'm sharing with you guys. And I want everyone to just continue to learn alongside me as we grow as individuals in our own investing journeys, right? So that's the stream. Thank you so much for watching. Wendy, have a good night. DB, have a good night. Appreciate you guys so much. Everyone, take care.